Sure, guys. What a day to talk about the markets with the rand dropping another 50 cents in a matter of 10 minutes.
Is it 10 minutes or 5 minutes?
Well, it was so quick. I couldn't keep track of it. The next thing I saw is we were at 1680, pushing 1670. And this morning, the expectation was we're going to break 1750.
Okay. And tell me, the drop, how many cents was it? What was the high for the day?
The high for the day was about 1725, and then we made the low at 1675. That was now before we had this conversation. So maybe in between, Mr. Trump said something again, and we could be at 1640, or we could be back at 1750.
We might even see 18 by the end of the day.
Yeah, and I think that's been the tone for the past 2-3 weeks. Is the market has been driven by headlines, and has become increasingly difficult to predict, because you can look at technical levels, you can look at fundamentals, but if a headline drops that there's been another missile strike, or they are making friends again, then the market changes and it influences the whole world after that.
So what exactly happened with this drop? Was it it was something that Trump said? What was the discussion that affected this drop?
Yeah, so what happened over the weekend is Trump gave Iran an ultimatum to say they have 48 hours to open the Strait of Hormuz. Otherwise, the American military is going to bomb their power plant facilities and any type of energy infrastructure. That took the rand up to above the 1720 level, which is the first time this year we've seen that level. And then the drop that we saw, the sudden 5-minute or 10-minute drop, and still continuing now, was after the headline came out that Trump said there were positive talks between Iran and America, and he took his 48-hour ultimatum that would have ended tonight, postponed it with another 5 days, and said that I'm not going to bomb any energy facilities for the next 5 days.
Yes. And he's referring to not bombing the facilities, but not mentioning the Strait of Hormuz. That's still something that they have a stranglehold on, the Iranians, and they can still retaliate on that.
Yeah, and I think the big thing at the moment is the Strait of Hormuz is where the leverage is for the Iranians. So the moment they give up power on that, then America and Israel basically wins the war.
Yes.
So I don't think it's such an easy discussion that within one day they're going to resolve it and be friends again and open the Strait of Hormuz and everybody's going to get oil again. I don't think we're there yet.
Yeah.
I can just imagine with both of your industries, the rise in oil price from $70 a barrel to almost $120 a barrel, how big of an impact it had on your industries as well.
Absolutely. I think for any importer in South Africa that's importing product that's derived from Brent or closely related to it, for instance, naphtha is a byproduct or is correlated to Brent crude, and that influences ethylene pricing. So what's ethylene? Ethylene is plastics. So you've got HDPE, which is your milk bottles. You've got PET, which is your cool drink bottles and your water bottles. That's directly coming through a 30% or 40% increase on import prices. That's not just on the Brent crude, it's on the freight as well. So obviously, they call it a war risk surcharge. So typically for a 20-foot container, you'll now pay from the Middle East or South Asia, you can expect to pay $1,800 per container for a 20-foot additional surcharge. and $3,000 for a 40-foot container. So I mean that's just a war surcharge if it's coming from that geopolitical tension regions or passing it, and there's some uncertainty exactly how they get to this $2,000 or $1,800 and $3,000, but it's just insurance. That's basically it, and rerouting. Some of the vessels that I have to go the other way around the tree to get there where they want to be. So, I mean, the fuel surcharge on its own, MSC and Maersk has released news on what is the emergency fuel surcharge. That's minimal. I mean, relatively to the war risk surcharge, you're looking at $100 for a 20-foot and $200 for a 40-foot. I mean, that's reasonably small compared to the war risk surcharge. But commodities overall, imports, we are seeing 30 up to even a 60% increase in prices. Industrial commodities, food and beverage ingredients, anything relating to imports into South Africa or sub-Saharan Africa is massively influenced.
Yeah, soybeans, especially soybean oil, is already a political weapon because in Brazil, it's been used for biofuels. Palm oil is used for biofuels in Indonesia, and soybeans it's used for in the US. Soybean oil in the US is also used for biofuels. So and on a soybean trading, that's also before the war. That's also that headline has been traded all the time, and also guys preempting what the result of a Senate hearing will be, or what one of those hearings will be. So it's already political before the war.
Yes.
And before Trump had come into power.
Yeah.
Because when Biden was there, it was already political.
Yeah.
So there's less vegetable oil being made feed to the market for what it's supposed to be used, and that is for feed, not for food.
Yeah.
So now fuel. It's now used for fuel, not for feed.
Yes.
Okay. If that makes sense. So now that oil prices, like veg oil prices, has been escalating, and now this oil, the Brent rally, it has just been on steroids. But in South Africa, it's actually for farmers, it's a get out of jail card with the current situation for this current season, because maize, we're trading 3,200 Rand for July futures, which is very low. And now since the war, today we traded 3,500 Rand, so it's a 300 Rand spike, but we're going to have close to 17 million tons of maize. So 17 million tons, 3.5, it's a decent price for a farmer today. Soybeans trading 6,300 Rand, make it middle of February. Today we traded 7.1. So that's a huge increase in the price. So in this, it's opportunities for farmers. And us as traders, we love volatility because you can't preempt what Trump is going to tweet. But if things go back to normal, then 7.1 soybeans is a very good price to have sold your soybeans. So, and also if the Rand at 17 million tons of maize, you will have to export close to 3 million tons of maize, which is quite a lot. And with the Rand trading at, what's the low that we had on the Rand?
The low earlier in the year was about 1564.
Yeah, at 1564, if we were trading 1564 today, maize would only have been exported to Asia at about 2,800 Rand.
That's right.
Because that's the price the maize had to go to export. But now with the Rand trading at 17 plus minus, you can export at say 3-4.
Yes, yeah, that's
So
So that's a 500 rand premium that you're getting because of the rand weakening since the beginning of the year.
yeah.
So in this mayhem, like when the Russia and Ukraine war started, Russia and Ukraine produces more than half of the world's sunflower seed.
Mm.
So when Russia invaded Ukraine, the whole world thought there was not going to be any sunseed ever in the world again.
Yeah.
So sunflower seed rallied about 2 weeks, about 2,000 rands, which is a lot, from say 10 to 12,000 rand a ton.
Yeah.
And traders and farmers and co-ops in the world, and that's why I think people will make plans around the mayhem at the moment. Because when Russia invaded Ukraine, the Ukrainians made plans to get the seed out of the country. So via trains to neighboring countries, because the harbors were bombed, but if they could ship by train to neighbors, then it's just in another way. So with this Strait of Hormuz story, I know it's not great for the oil flow, but oil is flowing. I mean, the Russians, that oil is flowing. India is getting the oil. China is getting the oil.
Yeah. Sanctions have been lifted.
Pakistan is getting the oil. So Iran is mad at the US and the Israelis and the allies. But now Japan might go and say, listen, but we also not attacking you. Please send our oil.
Yeah.
So then they say, okay, we'll let Japan. So then you realize, okay, 20% of the world's oil is going through the Strait of Hormuz.
Yes.
But Russia is getting all the rest of, there's a lot of countries that actually charge the 20% becomes 10%. And you realize, oh shit, and now the US, oh no, now we're pumping more oil against $100. So, and Canada will produce more oil.
Yes.
Because there's big margin producing oil anywhere else in the world. I know Russell always said that cure for high prices is high prices.
Yes.
And this is exactly that scenario.
Yeah.
I know it might feel like the end of the world, but when Russia invaded Ukraine, we also thought it was the end.
Yeah.
And when the US invaded Venezuela, we thought, what the hell is going on? So I think, for farmers, there's opportunity in this. It might get worse, it might go higher, but I mean, in the short term, I think there's opportunities. But then the next season is a whole new different story. Because fertilizer prices is going to go up.
Urea.
Yeah, so farmers have to start buying fertilizers for planting. Well, the US has to start planting their soybeans and corn come July.
Yes.
So they must make a decision. Are they going to plant corn at the $4.50 or $4.70, whatever the price is, or soybeans at make it $12?
Yes.
So that's what we try to sort of predict. So apart from the weather that has to play an influence, a role, this is short term is volatile, but it's also opportunities.
Especially for the farmers, like you said, in the local market, it's trading closer to export parity, so it makes a lot of sense for them. I just hope they're not sacrificing all of their profits for the diesel increase that's going to be in effect on April.
The diesel increase is very tricky to maneuver because we as traders, we give the farmers a price on a Monday,
yes,
and they confirm it, and the diesel goes up on a Tuesday, and then by Wednesday you make a loss.
The world changed.
And then you can't go. We don't like to go back to a farmer or to a client and say, listen, the diesel price.
Yes.
As we over a year, if you quote over a year, yes, you can get it. But in a week, we don't bicker around that. But it is difficult to maneuver.
Well, I see that they're expecting now an increase for 1 April for
but it's April
diesel.
Fool's Day.
Yeah,
Can you believe that?
Yeah, it could be April Fool's. R8.52 to R8.64 per litre.
Increase.
Being the highest level ever recorded for diesel.
So what's it, 50 rand a litre?
Don't even excuse should be close to it because it's currently under that 22 rand, so close to 30 rand. So thinking about diesel availability from all of these giants, Sasol, Engine, all of these guys, there's not availability. So how are these farmers going to?
Isn't it cheaper to fry your tank up with brandy?
Or oil.
Will it work on brandy?
You just sell them some soya oil, and it will.
If you have some coke with it, I'm sure you'll get a deal done.
Yeah. So that's going to be a big effect. I see, especially on local transport. You guys are obviously trading thousands of tons. What the effect is on transport rates for road freight. So that's also a large effect. Exporting to neighboring countries, it was already expensive. So now with the increase,
I think what helps for now, at least, is the fact that the exchange rate is looking better for exporters.
Yes.
So exporters are able to sell their dollars now again above 17 rand to the dollar, and if they take out forward cover and forward points, even more in their favor. But I also think this is not just a short-term thing. We are now in the mess of it, and we likely, I think, within the next few weeks, going to see a bit of a de-escalation in the war, and you'll see prices, especially oil, and then everything with it, come down initially. But I think you guys would agree, and these increases we are already going to see is certainly going to have an impact on inflation as we move on later in the year. And we actually just arrived at a point where inflation started looking really good. In South Africa, we are 3% inflation, the US at 2.4% inflation. So we were moving into a cycle where, or were already in a cycle where interest rates were being cut and reduced. On our side, we already implemented quite a few reductions. The US started reducing, and now the central banks are in a space where they are saying, well, we cannot do anything now anymore because we have to first see how the next few months look and what inflation does. And I don't think it takes a rocket scientist to know that we are at least going to see for a period of time increased prices. So hopefully it doesn't extend for too long, and that we don't have to move back into a hiking cycle again where they start increasing interest rates. But I definitely think that businesses and households alike should prepare for a bit of an increase in prices over the next 3 to 6 months.
Absolutely, yeah. So they can't absorb these prices. So somewhere it needs to be inflationary, where there will be increases on anything consumer, fast consumer goods, right down to the bread, the guy buying the bread on the street. So that's definitely something that will play a role, I think. But more interestingly, what do you expect the Fed to do now? Will they be halting now because we were in a rate cutting cycle, right?
Yeah. So I think the whole world central banks actually sits back and wait to see what the US Federal Reserve does and what their stance is on monetary policy. So as I mentioned, they were at a point where they were expecting another 2 rate cuts for 2026. And at their most recent meeting last week, they mentioned it in a prior meeting, but they reinstated again and said they only see 1 rate cut for the rest of 2026. But they actually also mentioned that they cannot commit to a rate cut because of the uncertainty. And they are at a point where they have to see what the impact of this is going to be. So if the Fed doesn't cut rates, the dollar gets support, and we can possibly expect a bit more weakness in the dollar rand. We don't necessarily see the dollar rand going back to the previous highs of close to 20 rand, but that we can trade closer to 18 rand again is definitely on the cards. And then from our side, from the Reserve Bank, South African Reserve Bank side, we already implemented more rate cuts than the Fed did in this cycle. So we actually approached it decently and were able to cut decently. So I think from our side, we would just sit back and wait now. I think they would want to avoid a rate increase with all costs, because that, again, like inflation, that hurts the whole population at the end of the day, with borrowing costs going up. But yeah, I think it's a wait and see at the moment. I think central banks don't want to preempt this, because the war can maybe end this week, and the impact could be limited, and oil could maybe return closer to the levels it was before the war.
Yeah.
Or if it continues for the next 2 weeks to a month, that impact just increases and increases for as long as oil gets disrupted and prices stay high.
Yeah.
I think interesting
I
times.
think the long and the short of it is all this importing, well, hedging imports and export. This is good opportunity if you're exporting. And if you're importing, if you go back to 1650,
then
that's a good time to do something.
That's a good opportunity.
Not everything, but do something.
Yeah.
If it goes lower, the much the better.
Yeah.
But if you're at 1650, you do something as an importer.
Yes.
You will kick yourself here if you did nothing and it's starting at 1750.
Yeah.
So that's the same with farmers. I mean, that's, well, today, I know it's not the same prices as last year. Last year we traded more than 4,000 easily.
Yes.
But I mean, we have a big crop. If peace gets, I don't know. I'm not so into politics, or I don't know. World peace is not. We all want world peace, but I mean, I don't decide the world peace story. But I mean, at the current levels, it's maybe not a bad idea to do something, even if it's only a third of your crop.
Yeah.
So the mayhem brings opportunities. Use it.
Yeah.
If it bombs out, then you're a farmer and you have to sell your maize and you've done a third. At least you've only done a third.
At least you're mitigating your risk.
Yeah, that's the thing.
Yeah.
Markets are there to mitigate your risk.
Yeah.
We have a decent. We have everything is South Africa. I mean, we could have been sitting in Iran.
Yeah.
I mean, we are blessed in our country. We're not perfect. We know we have problems.
Yeah.
But we live in harmony in a way.
Yes.
And we can watch live golf over a weekend and watch the Springboks scene.
Yeah, absolutely. Yeah.
For sure.
No, I think just the last point from my side is apart from increased prices is availability as well on the industrial commodities. We're expecting prices to increase, but it's not just the price, it's the availability. So the suppliers from Asia.
Then you can't. It's difficult because if you buy too much and now there's world peace.
Exactly.
Then of the product.
Exactly. Then the market's running down again after there's been some better negotiations between Trump. So especially from China and India, we are thinking in a chemical perspective. It's almost impossible to get a valid price for longer than a couple of hours before the next day it changes and it's not valid anymore. So and force majeure is being called not being able to supply. So from our side, we suggest importers to at least see what is the forecast, what's your usage, and then if you have a little bit of stock, just wait a little bit and see what the situation will be. And if it doesn't turn out that way, I didn't say anything about it.
But I think what I try to tell my team is that this is no place for a hero. I mean, if you trade positions, keep it small. This can blow up. No pun intended, in your face.
Yeah.